Hi guys, Currency Games here again with another video. Today's video is going to be a bit more of an educational video, and we're going to go over daily bias and the importance of the daily time frame and why the daily time frame, not using the daily time frame was holding me back in my trading. Now, one issue that, in fact, no, I even wrote notes about this. So I'm going to go through my notes and each bullet point I want to discuss. So I make sure I discuss everything, and we'll do our outlook after as well. Why is the bias important? Now, bias is essential in this thing, in trading, because bias gives you direction, it gives you clarity, and it gives you conviction. Without those things, you can't execute with the right mind state. For example, if you're going into the charts with ICT's concepts, whoever's concepts really and truly, and you don't have conviction on direction, it's pretty much pointless, because you're just willy-nilly buying and selling just because you feel like it emotionally, to be fair, which is basically gambling. Bias helps get rid of all that. Bias gives you direction, it gives you targets, and it gives you real expectations within the market. Okay, and bias also psychologically helps you with holding trades to your target because you have conviction based on that bias. Now, why is the daily time frame very important? If you think about it on the daily time frame, if you know, let me go to a clear bit of space. Let's say this here is a daily candle. In fact, it's Bandewicks. Okay, and this is a let's say this is a bearish candle, and this is a bullish daily candle here. Okay, if you know that the next daily candle is going to be bullish, and you know that's not even how it would open. It would open like this, wouldn't it? Yeah, it'd be like that. Okay, if you know that the next daily candle is going to be bullish, what is the point in selling when all the momentum in this daily candle is going to be to the upside? So in this daily candle, you would have 6 4-hour candles that are most likely going to be bullish. You would have 24 1-hour candles that are most likely to be bullish, and you would have more 5-minute candles and more 1-minute candles that are going to be bullish, and the momentum is going to be more to the bullish side. So why would you sell in this? What's the point? That's why understanding the direction the next daily candle is going to go in is very essential, because when you know the next direction of the next daily candle, you know which side of price is going to be majority favored in price action. Okay, because why would you want to sell in this massive bullish candle? There's no point selling in that. This will keep you out of getting smacked out, because the daily time frame is a very powerful time frame, in a sense where if you're not correct in the daily time frame, unless you're scalping, you can get slapped out so quickly and so many times. Like, it's relentless, it's ruthless. If you're not correct in it, you can get slapped out over and over again until you appreciate the daily time frame. And the issue some people have is they don't have the patience to wait for it, because they don't have the patience to wait day in day out for the daily time frame to provide them with a bias. I'm not saying you can't get a bias from a H4 or H1, but for me personally, the daily time frame is the best way to get bias. Okay, now let me go back on my notes again. Another thing with bias, using the daily time frame to find your bias will stop over trading. Let me give you a prime example of this. Okay, let's say for example you were in this area here in price. Okay, look at all the consolidation that took place here in this box. Okay, on the daily time frame, there's not that many candles here. Okay, but what's the point in being involved in all of this consolidation? What's the point? Would it not be better to wait until you tapped into the premium range of this fair value gap on a daily time frame before you looked for your selling or buying opportunities in this instance. Let me mark that out properly. Sorry. Would it not be better to wait until we tap into the 50% at least of that fair value gap? Because look, once we tap into it, we get the fractal high form here. And look how we sell off. What's the point in being involved in this noise? If we were to then go down to the lower time frame, this noise is just an even bigger consolidation. Now, how is this probable trading? It's not going in any direction, it's going sideways. And don't get twisted, there are people that prefer to trade in consolidations. If you're a trend trader, this might not be for you, but if you're a consolidation trader, these might be the perfect trading environments for you. That's completely different, that's fair enough. But me, and for this video personally, it's not how I would trade. I don't like these consolidating conditions. I like to trade in trending markets. And that's another thing, guys. You need to know what type of trader you are. Are you a trend trader, or are you a guy that likes to trade consolidation periods? Like, what type of trader are you? Because the daily time frame can get you out of these stupid situations. We already know we haven't hit the premium side of the daily market structure here. Okay, and then look, once we do hit that daily side of the premium side of that daily market structure, look how we then sell off. Look how we then travel back into this fair value gap here. Okay, and it's all in hindsight, of course. So bear that in mind. But everything's easy in hindsight, as I always say. But then look at the complete difference in price action. Let me put a line right there. Okay. Look at the complete difference. This here is foolishness that you do not need to be involved in. This here will make you lose your FTMO trials. This here will make you blow accounts unless you're very, very nimble and precise with your entries. It will get you into so much foolishness. And the worst thing is, you might win a trade in here and think, oh yeah, it's perfect. But we need to look at the bigger picture. Winning trades in here will make you go and just take every single trade, and you'll just end up on a losing streak. Trust me, I've been there, I've done it. But then look at it compared to this. One direction, one-sided. Look how much more pips you can make. Just all from waiting for the daily time frame to come to that area. And then waiting for, let's say, the nice market structure to form, the nice MSB to form. Look. Let's say you wanted to wait for the MSB down here at this low. You could, to be fair, you could have even have waited for it up here, to be fair. But do you see the difference? That's what the daily time frame will keep you out of. Now, let's say you weren't even on the H4 when this was happening. Say you on the H1. Look at all of this, mate. Look at all of it. It's pointless. Like, it's actually pointless. And as I said, this is not to every trader because everyone trades differently. But for me, and for my trading and for my logs, that's not what I want to be involved in. And I think that would be the same for majority of people. And you know what? You might have to go through this before you understand that patience is a key thing. And look, this took 1, 2, 3 weeks to get rid of. Maybe in that 3 weeks you don't look at this pair. Maybe you don't. Yeah, you're going to have winning trades here, but if you trade in this type of trading environment for a long period of time, are you going to be more profitable, or are you going to be less profitable? So all these things you have to consider. Just because you get one winning trade in these environments doesn't mean you're going to be consistently profitable within these environments. Compared to this, look, we're just flowing downwards. Its structure's easy to tell. You know your areas. You know what you're looking for, and that's all because you waited for it on a daily time frame. Okay. Let's look at another example. Let's go to EG. Now let's take it out of hindsight. Let's look at charts we actually analyze on this YouTube channel, and predictions we actually made on this YouTube channel. Okay, if you remember a few weeks ago, we were looking at a fair value gap resting just here on EG, yeah, and we were talking about this. Oh, not there. Sorry, no, not there. Sorry, it was the fair value gap resting just here. Sorry. I'll tell you one bit on EG, okay, and we're also discussing this order block here on the daily time frame. Yeah, all right. This is not hindsight. This is charts that I actually analyzed beforehand on YouTube and showed you guys after as well what happened. Okay, now I'm not saying you can't trade the retracement up here, okay, but let's look at the difference in price action in the retracement compared to the actual move down that happened. Okay, got that there. Let me put that in red, and let's look at the actual move down in green. Okay, put that in green. And I think this lesson will help a lot of you get out of these stupid trades that you don't need to be in. Look at it. Look how much cleaner market structure looks here. Look at it. It looks beautiful. It's an art piece, fam. Again, let me put the line right here. To be honest, the structure does not look that bad here. And that's what I'm saying. You could have traded this up as a retracement play off this raid, which is fair enough, to be fair. But again, look at the difference in price action. Let's go down to the hourly. The hourly looks so much cleaner on the green side. Why? Because the daily time frame has reached a point where it's in a premium area, where the daily time frame is ready to go down. Once we've wicked this order block here, look at the wick. We've got proof of bearishness. Okay, look at the market structure break we had on the H4. We took out the low. Okay, let's go back on the daily time frame. Look how we made a high here, a fractal high. Bearish candle, bearish candle, bearish candle, bearish candle. The majority of the daily volume is going to the downside. That is bias. That is bias, fam. Okay, let's put this back on. This green bit here is bias. Why would you want to long here? Again, if your hourly is your framework, you could look for longs here. Don't get it twisted. But the majority of the pressure is to the downside. The majority of the movement is to the downside. If you just took sells here, you'd be laughing. Okay, obviously in hindsight, look at all the ICT PD rates you could have used just for sells. Yeah, you could have bought it as small retracements, but again, you have to be nimble to do that. If you're going in line with your daily bias, you would not be buying this. You'd just be selling it. But look how clean it looks. Okay, look at that. And then let's go to this bit here. Choppy, 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 choppy. Lows get taken out, highs get taken out. In these type of areas here, this is where you're gonna experience more of your search and destroy models happening. But here, the highs are kept. The highs are rarely taken out. Okay, the highs are held strong until we reach our target. That's what I'm saying. Like, the setups that will give you the highest probability is based off the daily time frame context in this. I can't stress this to you enough, because it will get to a point where you'll just get slapped out of trades, slapped out of trades, slapped out of trades, and you're thinking, wow, what's going on? But it's because you're not looking at the daily. If the daily's not clear to you, what's the point? What's the point in getting in a setup? Okay. And again, this minimizes over trading. Okay. Let's say for this for example, this probably would have been 2 weeks. You probably would have not traded this pair. Maybe you could have got a nice long in to go to daily premium here. But then look at this week here. You probably could have got loads of setups in here. And again, you could have probably held these setups for bigger R. Whereas here, again, look, it's just up and down, sideways. Again, look at the consolidation we experience in these areas. You see what I mean? But no consolidation here, minimal, just downwards, downwards, downwards price action. And as I said before, you can hold these positions. And this is another thing. Sometimes it's about maximizing when you're right. Sometimes it's not about going in and catching 2 out here, 2 out there, 2 out there. Sometimes go in, get your daily bias right, and hold it. Hold that position. You might want to take partials, yes, just so you know you secure some profit, but hold it. Okay? 1 5-hour trade a month can take you a long way. Okay? Daily bias is essential. Like, I can't stress it enough. Using the daily time frame will keep you out of setups that you don't need to be in. Okay? Again, that's why I said to you, on EG, we're experiencing this consolidation here. I don't need to be involved in that. It reduces my probabilities, and it's not what I need to be involved in. I want to wait until the daily time frame gives me definitive direction. Okay? It's as simple as that. Let's look at another example. This will be in hindsight again. Alright? Let's look at this, for example, here. Okay? look what we're in between in the day time frame. We're in between here, and we're in between this here. Is that something we're trading to? We're in between these levels? No. Maybe you could have seen the short here and short it down to this point, but again, it's just a bit choppy, all right. But then look, when we come back down here and we get this explosive bullish candle upwards, let's look at the PA. It's just much cleaner. Again, we get that nice H4 MSB to the upside. Okay. In fact, no, it's down here, sorry. Like, do you see what I mean when I say when you're trading in these type of lovely expansion moves, it's beautiful because you don't need to worry about taking sells. You just need to worry about that one side of the market. Okay? And that's all from the daily time frame. These moves are only going to happen from the daily time frame plus. You're not going to get these from the H4, the H1s. Okay? And this is the thing with me as well. You'll get too glued into time frames below the daily because you want that instant gratification. You want that setup right now. When really and truly, the money is on the daily. Just wait patiently. Sit out the trades for a bit. Just look at the markets, man. Just sit back on the daily and bake off, man. Just bake off. Daily ain't going nowhere, man. Just sit back and be like, cool, I'm in this zone here. I don't need to even look at the low time frames. What I need to do is break out of this zone. Okay? So as I said again, some people might like that. For me, it's not something I like. Okay? Again, for EU. Sorry, let me get rid of these things now. Like in these zones, I just, for example, look in EU. Let's go to the weekly time frame. We're at this weekly block. Why would I want to buy into that? What's the point? Okay, you're gonna come down here. You know you've touched that weekly block. Why are you buying into that? What's the point? You're just not going to get that explosive movement up because you've got this support level, resistance level is resting right above you. Okay, why not just wait till the daily time frame gives you definitive answers when we get to this level? If we get fat bullish candles inside that, then yeah, probably still can get buys, but let's just wait. Okay, let's just wait. And that's why the daily time is important. It gives you that time period, that resting period. Okay. So yeah, guys, that's all from me today. But yeah, I just wanted to go over the importance of daily time frame with you, and yeah, I hope you found that important, and I hope that helped your psychology a bit. But yeah, any questions, leave in the comment section, and yeah, I'll see you guys tomorrow.